What's going on, guys? Hope you're having an absolutely fantastic day. So today I want to talk about why Alibaba is up sharply, right? So we can see that on the Hong Kong Stock Exchange, basically Alibaba is up 8.75%, and on the New York Stock Exchange, it's up 7.97%, right? So the reason is because of China basically announcing a stimulus package, right? So obviously this has broader implications. In fact, I talked about this in my video on the 17th of August, right? Basically about 9 days ago. And basically in that video, I was talking about how China cutting rates by a little bit means that they are capitulating, and basically they are being pressured into making these kind of moves to support the economy, because obviously the Xi Jinping's re-election is coming up, right? So let me just play you a short clip from that video, right? And if you want to watch the whole video, I'll link it on the top right. So one of the main reasons that I instantly max out my position, because I just bought it one shot, right? I didn't like dollar cost average it into it, which is what I usually do, is because of this, right? The People's Bank of China basically reduced the main rate at which it's provided short-term liquidity to banks from 2.1% to 2%, right? So on obviously the 0.1% is minuscule, right? It doesn't really matter. But what it signals is that the government is looking to protect its economy now, right? Because you can see that in the past year and in the past 1.5 years, basically, the government is like max lockdowns and stuff like that, right? So property collapse still happening, all these things are still happening, right? So I'm not gonna downplay that. But basically, if they are cutting rates, basically they are ready. There has been enough pain and enough hardship on them to basically say that, we are ready to capitulate and we are ready to support the economy. So that's just some of my thoughts, right? But so yeah, as I mentioned in the video, yeah, I do believe this is just the starting, right? So let me just read through this article, and then I'll just give you some of my thoughts, right? So Beijing, China stepped up its economic stimulus with a further 1 trillion yuan, so 200 billion. So you can see, even though it seems like a lot, 1 trillion yuan, 200 billion, it's nothing compared to the US stimulus, right? So whether this will cause a lot of inflation because everyone's locked down right now, imagine you give them money and then suddenly, when they stop being locked down, basically they come out and spend all the money and you have an inflation problem, right? But let's see. So the State Council China's cabinet outlined a 19-point policy package on Wednesday, including 300 billion yuan on state policy banks can invest in infrastructure on top of 300 billion already announced at the end of June. So local governments will be allocated 500 billion yuan of the special bonds from previously unused quota, right? So you can see that it's from previously unused quota, not just writing more stimulus, right? Because like the US, like they write it, they use it, and then they're like, oh, we need more. So that's why they have a gigantic inflation problem right now. That's not the only reason, but obviously that is a big reason as well, right? So Li Keqiang basically said to maintain a reasonable policy scale in a timely and decisive manner, right? So according to a readout from a state broadcasted CCTV. So I think this is incredibly important, right? Because you don't want them to use basically stimulus, and you don't want them to make money worthless, right? And them to cause an inflation problem. So all that will happen, like after they cause an inflation problem, is they just have to raise interest rates again, right? And then they have to cut back on QE and basically do QT, right? And that will be quite bad for the economy, right? So actually the golden ratio is when they can maintain lower interest rates, which China is like 2 point something or 3% right now, so it's pretty low, right? So lower interest rates with high growth and low inflation, right? So that is like the golden ratio, right? But to my knowledge, the only period that has happened was actually in the US in 2008 and up to 2018, right? So those were like 10 years of incredible growth for obviously stocks like Amazon, Apple, all the FANG stocks. And basically the economy expanded quite well as well, right? So basically, not to cut this article short, because it is a well-written article, but basically China's COVID lockdowns and also year-long property slump has weakened growth, so putting the government's official goal of around 5.5% well out of reach, right? So officials have downplayed the target in recent months as they stick to COVID zero policy and of eliminating infections, with economists polled by Bloomberg projecting less than 4% growth this year. So you can see that the world basically doesn't believe like what China is saying for their economic projection, right? And I personally don't think they'll be able to hit the 5.5% because previous numbers are showing that they're like at 1 or 2% growth, right? So maybe perpetual lockdowns are not so good for business. Who would have thought, right? So Goldman economists said measures announced on Wednesday won't be enough to lift the overall growth rate from the 3% that they're projecting. So this I tend to agree, right? Because I don't think just because you have a 200 billion stimulus, then the economy is going to be vibrant. So 200 billion in the grand scheme of things is almost nothing to China's economy, right? So their economy is what? So their economy is 14.72 trillion, and 200 billion of stimulus is really not going to move the needle too much, right? So what will really move the needle is a change in policy stance, right? Probably hopefully after Xi Jinping gets re-elected, he's just gonna lower the lockdowns and also like let productivity climb, right? Basically, because now the issue is not that nobody wants to work. Like in the US, they have like a employment issue, right? Like you have $15-17 minimum wage at a restaurant, but nobody wants to work, right? Because maybe people have too much money, or maybe they just are scared of the virus or whatever it is, right? But in China, it's like they have no choice, right? So you don't get to work, right? Even if you want to work. So we'll see when they reopen whether China has the same problem with US. Basically, they can't get people to participate in the labor force. But in my opinion, I think the Chinese want to work because a lot of people there are relatively poor, right? So they would be forced to work, I guess, in a sense, because they have no money to eat and all that, right? So the other thing is also China's stock surge as US talks on delistings progress, right? So Chinese stocks listed in the US jumped by the most in more than 2 months as stocks to avoid delisting from the New York Stock Exchange gathered momentum. So you can always see that things aren't always as bad as they seem, right? Because a lot of people will be like, once it was announced that Baba was put on the list, the stock basically dumped, right? And I'm not saying this 7-8% is a big thing by any means, right? So if you look at 1 year or even the 5 years, it's still down like incredibly much, right? So on the Hong Kong Stock Exchange, basically it's down 70%, right? Still. So but I bought in at like $93, so maybe tomorrow it opens higher. Doesn't really bother me, the short-term fluctuations. But at the same time, it is good to see that the thesis is on point, right? The thesis of continuing stimulus, that the government is willing to step in to help all these companies and all these businesses, is basically still on the right track, right? So my investment thesis is correct. So basically, my thoughts on this Chinese US delisting kind of thing. So if it does get delisted, I'm willing to add more on the Hong Kong Stock Exchange. So it really doesn't bother me, as I said in my previous video. But it is good news if US and China can work their things out, and can the Chinese companies basically let the SEC audit their books, right? So it will be reassurance for us investors as well that there's no fraud going on in these Chinese companies. And then also it will be reassurance to the market that China is an investable place, right? So that's about all I wanted to share today. If you did enjoy the video, do help me smash up the like button, hit subscribe, hit the bell button. And with that being said, have a fantastic day ahead and peace out.